Hello and welcome to another Impact Insights. I'm delighted to have with me today three industry experts. That is Steve Seal, who's the Managing Director of Bluestone Mortgages. I've got Vicky Jeffries, Proposition Director at PRIMIS Mortgage Network. And I've got Robert Sinclair, who is the CEO of the Association of Mortgage Intermediaries. Thank you very much for your time, everybody. Can I just ask that you give us a very quick rundown of what you do, please? And Steve, can I start with you?
Yeah, thanks, Dale. Firstly, thanks for the invite. Great to be here with you. Yeah, I've often asked myself what I do, but I think if I had to try and summarise it into a bit of an introduction. So I'm the Managing Director of Bluestone Mortgages. Bluestone Mortgages, a specialist mortgage lender that focuses on the complex credit element of that market. So my role within the business as Managing Director is to clearly drive the strategy of the business forward and to make sure that we are supporting our customers and our broker partners and delivering a first-class service proposition to all of those parties. Fundamentally, very, very committed to the intermediary mortgage space and making sure that we are supporting customers who have been disenfranchised by high street lenders and effectively not able to secure their mortgages from those mainstream lending community.
Thank you. And Robert?
So yes, Robert Sinclair, the Chief Executive of the Association of Mortgage Intermediaries, which is the trade body representing the commercial interests of mortgage intermediary firms within the UK. So it's my job to make sure that firms continue to trade profitably, understanding what government and regulators are trying to do to impact the market and lobbying them to make sure that the solutions they come up with don't adversely impact our ability to do the job in the most effective way possible on behalf of consumers.
Brilliant, thank you. Vicky?
So I look after the proposition across all of PRIMIS Network for lenders, providers, GI and anything else that we've got within our proposition. So circa about 200 relationships within my team now. So I look after the day-to-day running of these relationships and the commercial arrangements, but I'm also responsible for making sure that the products are fit for purpose and meet the needs of our end customer, which is obviously really important. And I also look after our events program in PRIMIS as well, which, as any of you who have been on those events know, that's a job in itself.
Absolutely. Thank you. And my name is Jannels. I'm the Managing Director of Impact Specialist Finance. We are a package distributor. We're an approved packager for the PRIMIS Network, and we are also one of the Sapphire packagers for Bluestone Mortgages. And also Vicky and I sit on the Association of Mortgage Intermediaries Industry Contact Group. So we're all very well known to each other. So I just want to start with a question on stamp duty. We're very close to having stamp duty extended. And is this really a case of, at the moment, just kicking the can down the road? And Robert, can I start with you on that one, please?
Yeah, and I think it really does depend on what the Chancellor announces and what the decision is from number 10, number 11 and Treasury. We've been active with our friends in the conveyancing world trying to lobby for a different form of extension. Probably the conveyancers and certainly the building industry want an extension that goes out further so that more people can qualify for a stamp duty exemption, but certainly the requirement is for some form of taper out so that there's an end date which says that effectively an offer that's been accepted by a vendor is given a date, and then the industry is given a reasonable period of time to complete that transaction. So there's that complete out period which avoids the cliff edge. It will still give us a cliff edge of it to be completed by a certain date, but giving the conveyancing industry some time to manage that pipeline has got to be the right outcome, because we currently have over 400,000 transactions in flight with conveyancers at the moment. And with all the best will in the world, even another 3-month extension of that might not be enough, because that's 12 Fridays to see that pipeline out. And I think it's reasonable that anybody who probably made an offer and accepted a property by the end of January would have a reasonable expectation that they could complete that before the deadline. And therefore, anything that allows anything further than that, I think, is a benefit. But certainly, our lobbying into government has been not just a simple extension to another day to allow more people to pile in on top, but certainly to stop that flow and then give time to work the way through the pipeline.
That's a good point. And Steve, from a lender's point of view?
I would absolutely echo everything that Rob just said there. And actually, interestingly, I was writing a piece around stamp duty deadline this morning and used exactly that point around a tapering element to the deadline rather than a single date. I mean, yes, it is kicking the can down the road. There's no argument about that, but I think in a positive way, in the sense that it's allowing the market more flexibility in terms of how it manages that transition and exit from the current stamp duty holiday. I mean, I think it was a strange situation, or an unfortunate situation to start with anyway, in that we originally had the Help to Buy Scheme 1 deadline and the stamp duty land tax deadline both on the same day. And for lenders like Bluestone, who operate fairly aggressively in the Help to Buy market, that was a significant challenge for us from an operational perspective, never mind the solicitors and the wider market and so on. So we were delighted to see the Help to Buy extension through to the end of May. And just to echo Robert's comments, from our perspective, if we were hoping that we'll see some kind of tapering relief that is fixed to a date, potentially where a mortgage offer has been issued or a transaction has been approved or something like that, and then those transactions can gradually roll off at a more sustainable pace, which makes the whole process more manageable for each element of the transaction.
Okay. Vicky, are we see, or we've got a lot of lender delays happening in the market at the moment. Is this going to help the lender delays filter out a little bit with less transactions possibly to meet by a certain deadline? And also, are lenders actually being transparent with the delays in the market at the moment?
I think we're all sort of like taking a little deep breath, haven't we, at relief that we're not all going to be sort of having this panic at the 31st of March, that's for sure. So I think, there's certain lenders where it was getting quite tight, obviously, to get all of that sorted. So obviously that's a bit of a relief for brokers. In terms of lender service overall, I think we're in a much better place than we were. Certainly, when we think about sort of the early summer months last year, that was very difficult to manage and very, very difficult for us as a network to be able to get the right messages to the brokers at the right times. That was a challenge. It is better, not without its challenges, because I think there are, a few lenders that have probably been a little bit optimistic, shall we say, and found themselves overwhelmed quite quickly. Hindsight's always a brilliant thing, isn't it? But yeah, by and large, it's better. I think there is some transparency. I think sometimes what I get frustrated with is that, lenders are working to a service, which is fine. And, they've got a certain amount of days and it's all transparent on the websites. But you've always got to put yourself in the position of a broker, and they've got to articulate that back to the customer. And sometimes what lenders think is reasonable, and almost sometimes what we think is reasonable in our industry, for somebody Joe Public, a customer at the end of it, it doesn't always seem reasonable, some of the days for servicing and processing, does it? So I think we could get better at making the messages through to brokers more customer friendly and giving them something nice and reasonable to articulate to a customer that doesn't sit in our world, where we kind of go, yeah, 10 days to look at something, that feels fine. That doesn't really work for Joe Public, does it? I'm not saying 10 days is fine, by the way, Steve.
Steve, I mean, how have you found it with all your team working at home, especially with the underwriters?
So just to pick on Vic's, but I think transparency is key, as is honesty and reliability, I think, in terms of those messages going back out to the broker community. So I'd echo that. I mean, from our perspective, I think we covered this on a video we did a few months ago, Dale, but we've had everybody working from home now since, well, actually for a year, nearly. It was March, wasn't it, since we took everybody out to start working from home. We're fortunate, I think, that we operate on a completely cloud-based platform, so it's literally had no impact on our operating model at all. And the efficiency that we see from our underwriters and case managers and colleagues across the business, there's been no detrimental impact. And obviously now it's pretty familiar, right? So it's almost become business as usual, and everybody's very, very comfortable working from home. I think just on the service point, I think it's just to perhaps give a lender's perspective, it's very difficult. So we inevitably try and be honest and transparent, and I think the market generally, the lending community, has been trying hard to, certainly with these milestones that have been originally there at the end of March, trying to set expectations for a while around there's only so much that will fit through a funnel in a certain period of time, and with the best in the world, lenders can't double or treble their operational capacity overnight. And from our perspective, I think we started trading again in the summertime last year after a short pause and during the first major lockdown. And since then, we've managed to, I think, hopefully deliver pretty strong service levels. Dale, tell me if you disagree with that, but I hope we've managed to deliver pretty strong service levels during that period. despite almost a doubling of volume coming through the business. So I think you almost need to sit, yes, I understand the brokers are in a very difficult position. They've got to manage that customer expectation. But from a lender's perspective, also, we've also got to manage that broker and customer expectation whilst also trying to keep our operational capacity growing at the right pace to meet the demand, which for a lender like Bluestone, who's operating in a market which is growing rapidly, it's important that we focus as a business on making sure that we're forward looking all the time so that our resourcing levels are almost ahead of where we need them to be, which is a constant battle for us. Yeah.
I think right now, I think everybody is obviously working a lot harder than when they were in the offices. I think, your home life work balance, etc., is just a little bit all over the place at the moment. And I for one am getting headaches from looking at the screens all the time. It's just even though I've been doing it for a year, the last few weeks it's been giving me headaches. But Robert, we're all working incredibly hard. Is this sustainable moving forward? And what should a broker be doing with regards to looking after themselves in the current climates?
And the fact that actually most people who work in our sector are people. The fact that we've not had those little benefits of the odd meetings out, the beers, the coffees, the chats, the stuff we all enjoy, is making life difficult. And I recognise that. I mean, I found it really hard coming back in January after a couple of weeks off, and found getting back re-engaged really, really, really hard work. And that's not about being mentally ill. It's just about the fact that I'm a human being with all the emotions that go with that. That just means it's hard. And sometimes it is hard as well for people to say, it's okay to not be okay. And we've all got those problems. And we've got hosts of people who work in our industry who do it for the convenience of working around school life often, who are now homeschooling at the same time. I would hate to be in that position, because it must be really, really hard and difficult. But the other part is that I'm actually also not sure how we're going to cope with going back into work, because the sheer thought of, somebody said to me the other night, Robert, you go into London quite a lot. When they shut the tube gates at Bank down to the Northern Line and you're caught in the underground tunnel, 25 deep, 25 wide, and you can't move. How are you going to feel about that in a COVID world? I'm going, I don't want to do that. I really don't want to be in that space. And it brought it over the other day. I was watching an excerpt on television of Boris in the throes of arguments in the House of Commons over Brexit. And you saw these MPs crammed in together. And I went, whoa. Because of all those people crammed together, something we've not thought about or been close to for over a year. And I think we're going to struggle with going back to normality, never mind dealing with this abnormality. I think there'll be all sorts of strange things that people struggle with as we go back into whatever normal becomes after we reach the end of June.
Yeah, I think it's quite scary. And also the fact that you can possibly go to a festival in August as well with tens of thousands of people, apparently, from the 21st June onwards anyway, but there we go. So, Vicky, do you think at the moment, the value of advice is more prevalent now than it ever has been, especially for first-time buyers across the market?
Yeah, I mean, in sort of any sort of difficult situation, any economic downturn, any sort of, different circumstances in the way of life, obviously advice comes back to the forefront, doesn't it? And I think you could describe the last 12 months as, quite frankly, throwing everything at the customer that you could possibly get. You've got personal circumstances change, working life change, people struggling, with finances. You've got everything. So as a customer, to try to navigate all of those different pulleys and issues with trying to obtain a mortgage or just go through the process of buying a property in itself, you have to seek that professional advice. I don't know how anyone could possibly navigate it. I mean, if you just take, say, if you're a self-employed person, you couldn't possibly get yourself a mortgage at the moment, could you? You just couldn't even begin to start. So I think, yes, the advisor is well and truly back there. I mean, we always have been. Obviously, our sector's been growing for the last few years. But I think I often say with advisors, you are the professional. You absolutely, know everything inside and out. I'm really not sure how our advisors with a panel of 80 lenders manage to remember everything on a daily basis. They are absolutely brilliant. But it's a lot of it is the human element as well. And I think when you're talking about first-time buyers specifically, they're not coming to you to get the mortgage. They're coming to you to buy their first house. And that is a really different mentality. there's an awful lot of hand-holding, explaining. I mean, the word conveyancer, you might as well be speaking in German to a first-time buyer, mightn't you, in terms of that? You know, all of the different processes, even, you know, simple things like the home insurance that we say, yes, you must sell it, but you've got to explain everything to a first-time buyer. You know, the whole exchange and completion process. And I think the advisor is more than just a mortgage advisor. They're a counsellor. They're often a second parent.
Yeah.
You know, they all sorts of different things. And I think, you know, it's a very privileged job, and it does take a certain person to be able to juggle all of those different facets of what you need. And I think, you know, more and more as we come out of this pandemic, and a lot of, you know, as furlough starts to unwind, and, you know, the full fallout of sort of, you know, some of the self-employed things we've talked about, people that have been on payment holidays, as that starts to unfold, not only is it going to be first-time buyers that are going to need a significant hand-holding, it's going to be a lot of customers. And that's where the advisor is that critical person to just pull all of that together and absolutely get the best outcomes for customers.
Hey, Robert, anything to add to that?
I think that's a really, really good exposition of exactly why advice is at the heart of everything that should happen here. And, you know, I hear lots of people talking about the fact that we can systemize everything and make it all automated, and somebody can start the journey and just input their details and it'll flow straight through to the lender. Yep, we've been trying to build that for as long as I can remember, and we've not got very far with the whole process. And those who've tried to build it have ended up employing lots of people. I just think that provided we keep demonstrating competence and passion and commitment to the customer, then there's always going to be a place for great advisors. And people will argue about the definition of advice and non-advised and execution only and IT and technology and how much will intervene. This is complicated stuff, and lives are complicated, and people's lives are becoming more complicated. Therefore, somebody who can help them navigate is going to have value for everybody. And not all lenders want to build big call center systems themselves to help in that process. They're happy to subcontract that out to experts. And that's why lenders like Bluestone are successful, because they've got great intermediaries who work with them in partnership. The big lenders who've got big call centers and big stuff, yeah, they'll continue to run that for a while. But I'm sure they'll move away from that over time as well, as they recognize that, why am I doing this when there's actually a group of experts out there who do it better, quicker, faster?
Just to jump in there if I can, I think I just echo Vicky's comments. I think the advice world is hugely important, and more so as we navigate out of the pandemic, right? So I mean, it's always been crucial anyway, but you know, there's a huge amount of commentary running through the market in terms of, you know, the true economic impact of the COVID pandemic is yet to be seen, I think, and it will be felt more over the next 12 and 18 months or so. And the amount of customers who will need the support of advisors to guide them through that process and understand what is achievable and realistic, and how they navigate the process and their circumstances will never have been greater. So whilst there's always been a strong demand for intermediaries and the advice process that sits behind that, I think the golden opportunity is to support customers over the next 12 and 18 months as they need that skilled expertise that advisors like Vicky's can provide.
Are we doing enough to get to the end consumer though? Because I think there's a big, I would say a big spend actually to get to that end consumer, to actually give them, you know, the power to go and search for a decent mortgage advisor in their area, to actually give them that advice and recommendation. Are we doing enough to get to that end person? And do they understand, you know, all the specialist mortgages that are available, like with Bluestone, or are they just burying their head in the sand and just hoping, you know, something will magic itself out of the issues that they've had recently, and as far as they're concerned at the moment, they don't believe they can get a mortgage?
I mean, I don't think that advisors promote themselves enough, you know, in their local community, in their local environment. You know, a mortgage advisor to me is a key part of, you know, a local infrastructure and supporting customers in their area. And I often say to our advisors, don't feel afraid to talk about your skills and what you can offer. Don't feel afraid to ask for referrals. Don't feel afraid to talk to all of your other businesses on the high street. You know, the old-fashioned knocking on doors and asking for referrals that we've almost forgotten about, because we get obsessed with the digital world and I've got to be all over Facebook and I've got to do this. But go back to basics, be part of your community. You know, they're professionally qualified with a hell of a lot of experience, and you know, advisors should speak up for themselves and be confident and talk to more people. I'm also really passionate about education for younger people in schools. You know, we know there's a huge gap in financial education in itself. You know, we've all probably, those of us that have been homeschooling, have got a lot of experience of the youth of today, and we know that, quite frankly, they're useless, and that's only become worse over the last 12 months. So, you know, I think it's a really important point that financial advisors can be that link in that young, early financial education, and being part of the local community and not feeling afraid to ask for referrals and put their experience and expertise to people who absolutely need it more so than ever before.
Yeah. I think there's a couple of points I'd agree with that. I think we're seeing a growing trend as well, Dale, of just perhaps linking back to the earlier question around technology. There's a growing trend, certainly on social media platforms, of links. You only have to Google something and it appears on your Facebook profile 2 minutes later, right? So people are out searching for mortgages or complex mortgages. There is going to be a range of social leads that will come and kind of point those customers in the right direction. But we did some research not that long ago, but about 12 months or so, and the principles of this won't have changed, where there was a huge volume of customers who were shouting about the fact that if they banked with a high street bank for their entire lives, they go and see that financial institution to try and secure a mortgage. If they get turned down at the end of that journey, there's no signposting from that institution to point them in a different direction, whether that's to an intermediary, whether it's to a specialist lender, or whatever the situation may be. They're effectively left hanging without a clear solution or alternatives made available to that customer. That's a real shame, because there's nothing stopping those customers navigating through alternative channels and securing their dreams of home ownership or whatever it is they're trying to achieve. And the challenge is within the industry that the signposting isn't sufficiently robust that points those customers towards the alternatives that are available to them in the market.
Yeah,
that's a good point. And going back to Vicky's point, there's round in the Horsham area, we have local papers, we have the free sort of village magazines and whatever else. They're always looking for content. So if you're in, your local area is one of those, just speak to the editors, because they will absolutely bite your hand off for just a little blog, a little update, a little market review, and so on and so on. But
especially on the specialist side, Dal, like it's almost like you want your advert seen as you walk out of your local high street bank and the mortgage advisor said no. You almost want your advisor advert there, don't you?
Absolutely. And talking about complex and specialists, Steve, are we doing enough? Are we well enough equipped to absolutely manage the increased complexity of our sector, and also to take on board the amount of increasing maybe in the adverse side as well that's going to be coming very shortly as we stop furlough and other bits?
Yeah. So that's a great question. I think one of the things we've been trying to do for a while is to work with businesses like Vicky's, like PRIMIS and so on, to support the education of intermediaries and make sure that they're skilled and feel confident and capable to help customers who are going to navigate in front of them with more complex scenarios. Certainly from our perspective, and I'm sure other specialist lenders, we're working very hard to resource our business appropriately, and you'll see that, I think, through Bluestone and others, to make sure that we are sufficiently and robustly, from a capacity perspective, prepared for the volume of business that we anticipate. We do think there will be a strong demand for complex credit mortgages as we navigate through the next 12, 18 months or so. We've already started to see that. I mean, I mentioned earlier on in this call, we're broadly writing double the volume we were 12 months ago, which is nothing short of incredible. You only then have to look at, just take CCJs as an example. I think in Q4, the volume of CCJs registered versus the prior quarter was 73% higher. And that's a clear indication that certainly for the more unsecured elements of credit and so on, that people are still finding themselves in financial difficulty. And as government schemes fall away, the furlough scheme falls away, and the pressures build over the next 12, 18 months or so, there is inevitably going to be a very, very strong demand for lenders like Bluestone who can support customers through those periods of difficulty. And I think, as best as we can, it's almost like a $64,000 question of trying to quantify what you think the scale of that demand will look like, so that you can resource your business to make sure that you're well placed. But it's also being mindful of there's clearly some subjectivity within that. So we have to be, it's that balance between being reactive and proactive during that process to make sure that we're as well placed as we can be. But I think the key thing, perhaps certainly from a partnership with Robert and Vicky, is making sure that the educational piece coming out through lenders is strong, so that brokers are really confident that when they see those customers, they know that they can provide help, they're confident with the solutions that are available, and that those customers are not disenfranchised by any kind of lack of confidence from the intermediary community to support them.
Yeah. Robert, anything to add on that?
You're on mute, Robert.
The whole piece around education and training and this whole background of the evolving economic cycle is going to make demand for complex credit, for want of a better word, just increase exponentially, in my view. And there's kind of an interesting dichotomy here, where we've got half the population, or a lot more, probably more than half, who are financially better off in this crisis, versus the other half who are not better off, in fact, significantly worse off.
Yeah.
And I think the challenge that the Chancellor's got and the government's got in terms of how they deal with that process, because that's not a great societal issue to be on top of. And therefore, I think there's going to be a lot of encouragement around the housing and the mortgage sector, because certain discussions I've had with Treasury, we got to a point of discussion around what actually drives consumer confidence. Is it rising house prices that drives consumer confidence, or is it consumer confidence that drives house prices upward? And we decided it was chicken and egg. You can't actually work out which comes first. And it genuinely is that type, that therefore you need a really vibrant, buoyant housing market to have consumer confidence, which then feeds the rest of the economy. And therefore, all elements of the finance market and the mortgage market are fundamental to keeping the whole thing on the train tracks and running in the right direction. And I think this is a government that recognises that, and therefore I think we're going to see lots of things that keep fueling the engine to keep us all really busy. But it does mean we've got to have people who are exceptionally competent, who understand all of the facets of what is available, not just what Halifax have got on the shelf today, to make sure that as many customers as possible can be serviced in a way that's appropriate for them.
Yeah, agreed.
Absolutely, I agree with that as well. And we're seeing it more now than ever, with regards to customers, and then coming to brokers to impact with regards to either complex scenarios or the start of credit blips, CCJs. You've only got a cough on a bill at the moment, you've got a default slapped against your name, and so on and so on. So obviously we're helping out PRIMIS members as one of their approved packages on that basis as well. But Vicky, I mean, how are you seeing the mix of remortgages and product transfers being affected with the pandemic? Are lenders taking these in-house? Are they still coming through the broker side? What's your members seeing at the moment?
So I think sort of in the first lockdown, obviously product transfers took off exponentially, shall we say, because pretty much that was, the only options available for customers for a period of time. But sort of through the summer, that sort of, maintained a buoyant level, but obviously remortgage came back as well. I think the lenders, by and large, are actually at a point now which is brilliant for us, where they almost, for once, they actually want us to do more, which is brilliant, because obviously some of them have still got capacity issues, and the truth of it is that those customers need to be retained. So we are getting a lot of support from our lender partners in terms of how we manage the book and how we maximise the maturities. I think it's really difficult to sort of measure the size of the market on maturities at the moment, because we know we've got some really big surges again this year. We're in there's a lot of opportunity out there for brokers. And I'm a firm believer that there's plenty to go around for our intermediaries. And I do also believe that an intermediary, does the best job. When a customer's coming to the end of a rate, they should shop around. They should get an advisor to do that for them and have a good look at what the availability is. I mean, if you think even customers that are on a 2-year deal, I mean, I think we could all sit back and think, well, what circumstances was I in 2 years ago? The world has changed 10 times over in the last 2 years, hasn't it? So I think, again, just going back to sort of some of the customer vulnerabilities that we see, and again, it's going to bring the advisor back to having a look at remo options or product transfer if that's the most suitable. So I think in summary, I see lots of opportunity. I certainly don't see this sort of like fighting between lenders and intermediaries. I think it's far more of a collaboration now, which is absolutely brilliant. And I think, you know, if we think about the market and how we sort of weathered, you know, those hard times in the first lockdown last year and how we managed to keep going on basically just a refinancing market for a period of time, it's phenomenal. And I think, you know, all credit to the brokers that kept going during that time. Absolutely brilliant.
Okay, thank you, Robert. I can do my product transfer on my phone and it takes me 3 clicks, or I can go through a mortgage advisor, and as per regulations and everything else, I've got to go through a fact find, suitability letter, recommendations, and so on and so on. Where is this going to win for the intermediary?
Well, I think that I'm going to say that depends on your risk and compliance function and how streamlined they've managed to get your system. And that's also an interesting debate between sales and compliance as to how far they're prepared to go around that, and not something I'll adjudicate on. But I'm always in the, although I work in the world of risk in most of the stuff I do, I'm probably in the more benign end of that discussion and debate, in that I know from a personal perspective, I'm in that position personally. And I think the interesting part is a good mortgage broker has that initial discussion very quickly that says, there's that option or there's this option for you. That's what it's going to cost you to PT. That's what it's going to cost you to remo, right? That's how much time it's going to take out. It's going to invest. Do you want to invest the time and the effort in order to get that through that remo process? And then that's when the decision is made. And then that's not a compliant way of doing it. It's not where everybody wants to hear about it being done, but that's the genuine reality of how the job is done at the sharp end. And that's why intermediaries are really good at their job, because they will then retrofit everything to make it look as though it was done in the right way, and it all stacks up and is correct. If it's easy for you and right for you to the PT, and that's easy way to do it, that's great. But what we would always want, or what I think should always be there, is the broker wants that conversation. The broker has to have that conversation with the customer. The customer should not be self-selecting. The broker should be front and center in the customer's face saying, before you push any buttons, make sure you've talked to me first. And I want to talk to you not just about the fact that you can save money by going through that PT or by remortgaging. What are you going to do with the money you save? Because when we spoke the last time, you said you couldn't afford the protection and you need to do that now. When we had that conversation before, you might get that PT offer based on the LTV that was there last time. If we remo you, we can get you into a different deal. We want to have that discussion with the customer every time, to be front and center the customer's mind about the value that's added. And that's the key. And I know that's what Vicky trains into our people all the time, and Steve's passionate about, because he's been around this industry long enough to know that that actually gives everybody the best results and the best reputation. Because anybody in a lender who thinks rolling a customer over a PT 4 times and they've trousered it is in cloud cuckoo land, thinking they've ended up with a happy customer. Because at some point the customer's going to rumble them and go, that wasn't very fair.
Yeah.
And I think on the customer contact point as well, Dal, you know, it's about, don't just speak to your customer every 2 years. Please talk to your customer frequently with different messages. Again, put in front and center the value of advice and your value as a professional advisor. Don't just talk to them when you want them to give you some money for something. Talk to them all the time. Keep that education piece going.
Yeah, I think it's a very, very good point. I think my concern at the moment is, obviously we started a few years ago with the lenders contacting client 3 months out, and then it became 4 months out, and now it's 6 months out. It's going to be next a year out. You know, it's one of those things, who's going to get to the client first? And you're right, Vicky, you've got to be consistently in touch with your clients all the time. Robert, other threats to brokers' business at the moment? Ambulance chasers.
My friends at places like Pure Legal, yes, I'll name them because I don't mind being sued. The issues that we have by people predominantly doing subject access requests in, and then two years later following up with intention to commit to court proceedings, or passing eventually any complaint that they may have managed to wind out of the case file to the Ombudsman, is something that's causing me, or has been causing us, significant concern. What I would say is that, you know, we recently held a meeting of many of the largest firms who've got most of these cases, and had a pretty robust discussion about where we thought that was all travelling. We'll be holding another one of those meetings probably late March, early April, in order to update on where we think we might be on a couple of cases that may go to court shortly. But anybody who's listening to this who's got cases where they've got data subject access requests outstanding. If they've not advised their PI insurer, they need to do so. If they want to talk to us about it, then please do. We're more than happy to have discussions with people to make sure that they're aware of what the risks and issues are around this. We've got a meeting with the Source of Regulatory Authority this week in order to discuss the practices that are going on from some of those firms. Because whilst we've got a very good relationship with the FCA for those that are FCA regulated and can deal with complaints about how they're dealing with consumers easily there, it's much harder to get traction within the SRA in the people who are running under the aegis of legal firms. But we've got our first meeting with the investigatory team at the SRA this week in order to take some of these matters forward. So I think all I can say to people out there, brokers out there, is your trade body is on it. And we're worried about it, concerned about it, and trying to do something positive about it rather than just sitting back and waiting for things to work their course. And we're certainly making sure that in terms of the people that the PI insurers are putting up by way of expert witnesses, that those experts are people that we would recognise as having a good understanding of the marketplace and how the market is operating, to make sure that we get the right outcomes in terms of those court cases that may go to determination. But we've not got any there yet, in that many of these people are walking away just before court case at the moment. So if we've got robust defences, we're finding that we're getting to 3 weeks out from court case and then they're folding. By that stage, of course, firms have incurred significant cost, and you have every right to go back after them for that cost at that point as well.
The excesses as well, yeah, absolutely. Without anything. Very frustrating. Okay. And Vicky, have you seen an increase in these subject data access requests and bits in the network?
I mean, I think it's fair to say that most networks have sort of seen an increase. I think, you know, when it comes to these sort of circumstances, that's why having the membership within AME is sort of strength and power in numbers, isn't it? And that shared expertise, and we're all adopting the same stance and the same approach, because we just can't tolerate people coming against us as an industry, can we? You know, it's unfair and it's, you know, frustrating. So I think, you know, the work that Robert and the team has done to sort of support us as a network has been phenomenal. And I think it's safe to say we'll be keeping Robert in a job for many years to come.
We all will be, without a doubt.
If we could just stop people doing anything bad, and interest only wasn't bad, and that's the stupid thing about this, is they're going down a road here where consumers got interest only because that's what they actually wanted, the cheapest possible mortgage between 2004 and 2008, and merrily went along with it without any disclosure of income, non-status mortgages, and now we're complaining about the fact they got exactly what they wanted and see this as free cash. It's really interesting, though, and those people who've actually talked to the people who are executing these complaints have all, when the broker's spoken to them, they've gone, yeah, why are you ringing me? Well, this legal case you're taking against me. Well, it's not against you. Yes, it is. No, they told me it'd be against the lender. No, it's against me. But you did nothing wrong. You and I both know that, but you've now got a legal case against me, which has cost me 10 grand by way of excess already. And these people are horrified when they hear this. Horrified. Because it's been sold to them by these people as it's free money, the same way your PPI claim was free money. They don't understand there's no such thing as free money.
Absolutely. Okay, Steve, we're coming up towards the end of the mortgage payment holidays. Are you expecting a last rush? Unless obviously it gets increased before the end of March, but yeah. And what is your view on taking clients who have taken payment holidays previously and so on?
Okay, great. Two questions there. So, are we expecting a rush? I'll be surprised if there isn't some demand towards the end of the mortgage payment holiday facility. We saw that during the previous almost end, if you see what I mean, when it was due to end the first time around. So I think it's inevitable that you'll see some demand where people think it's their last chance to benefit from that facility if there's a need for it. But numbers, it's fair to say, numbers are tiny in comparison to where they were. So I think that the scheme overall has served customers really well. I think it provided customers with a lot of comfort and reassurance for a very difficult and challenging time for many people, that has just provided them with some peace of mind. So we've been delighted to be able to support it, actually. In terms of actually assessing people who have had a mortgage payment holiday then and who are applying for a mortgage, then we don't take that into account. It shouldn't be impacting on their credit profiles, as you'll be aware. For us, it's more about making sure that the customer's current situation at the point at which we're issuing that mortgage offer, that the loan is affordable, they've recovered from any kind of financial challenges that they may have had 6, 12, 8 months ago. Others, we're forward looking rather than back looking, that the customer's financial position is robust and sound, and that we are truly confident at the point at which we're making that mortgage offer, the loan is affordable for them at that point and moving forward. And that's our key consideration.
Okay. And from a selfish point of view, Bluestone have been our biggest lender for the last few months with the Help to Buy product. How's the transition been from the old scheme to the new scheme? And it's still massively in demand from our side. So how are you coping with volumes?
I'm going to touch some wood and say the transition has been relatively seamless, actually. So I think we managed that transition reasonably well. The uptake for the new scheme has been strong. So I think there was some data out from Homes England actually in the very early days of Scheme 2, showing the demand was significantly higher year on year for Scheme 2 versus Scheme 1. I haven't seen anything more recently, actually, so I'm not sure whether that trend has continued, but certainly in the early days, the demand was very strong. It's a core part of our proposition. It's a market we're very committed to. So we'll certainly be staying loyal to that market as we move forward through the lifetime of the second scheme. Fascinated also to see obviously what comes out tomorrow from the government in terms of other dialogue that's taking place through the market around higher LTV mortgages. So we're kind of standing by our beds to wait and see what the detail of that looks like. Because so far I've seen a fair bit of speculation, but not a huge amount of detail. So we'll wait and see what comes out tomorrow. But yeah, Help to Buy from our point of view. Certainly, thank you for your support with that, Dale, because you supported us very well. A market that we see as being a key part of our proposition over the next couple of years.
Excellent. And technology. Sorry, Steve, just staying with you for one more second. Technology, good, bad? Has it helped you out? There's lots of things in the marketplace that are going to make the process a lot quicker. The front end, we can get offers out within seconds, etc., but we're still forgetting that the back end takes this long to get sorted once the front end has done this bit. So, I mean, from a learning point of view, where are you at with that?
Good, bad is a very difficult question to answer, right? Because you could argue it either way, depending on the point of technology that you're talking about. But I think principally, anything that improves the customer journey, improves the broker experience, and helps the lender from an operational perspective is a positive. Certainly, from our perspective, to give you one tangible example, if we take our minds back to that first national lockdown. Physical valuations being closed in the marketplace, and as a consequence of that, many lenders kind of closing their doors for a period of time because those physical valuations were not available. We put a huge amount of effort at that point into making sure that we could secure alternative valuation models, one of those being a technology-based AVM model, and that allowed us to return to market much faster than we'd originally anticipated, and certainly ahead of many of our peers. So to use that as a simple example, that's allowed us to make our solutions and our products available to customers earlier than we would have otherwise been able to do, which is a real positive. And certainly from an operational perspective, it's a significant gain from our perspective and from the customers in terms of not then having to wait a week or so for that physical valuation to be completed. So yeah. I think overall, I mean, the pace of technology and development in technology is not going to slow down. I don't think the focus of it in the marketplace will continue to evolve. We're very committed to it. Bluestone has always been a fairly technology-focused lender, utilising facilities like AVMs, open banking, and so on within our lending processes. And we're always keen to utilise technology, I think, to drive down operational costs and improve experiences. So I think overall, if you were making me choose between good and bad, I'd say technology is a good thing generally for the industry.
Excellent. And Vicky, from the network side, what have you done with regards to technology, electronic ID, document signing, all that sort of stuff?
Yes, so all of the above, and there's plenty of opportunities out there in the market. I think for us as a network, our biggest challenge at the moment is actually navigating all of the options available and trying to hone in on what's the best and where we want to commit to. Because with all technologies, and when you go fully API'd, and obviously we've got our own CRM system in Toolbox that we're very passionate about, we've ultimately got to be able to manage all of those relationships. So you've got to be really selective in terms of who you partner with, else it just becomes a cottage industry in itself just to keep up to date. So that's probably our biggest challenge. But, I'm complaining about something that I've been going on about for years, isn't it? My background's the GI market. I was working on aggregator propositions 20 years ago, and I'm sitting here in the mortgage industry now thinking, what? you know, the tech is, you know, I'm pleased that it's coming forward, and I'm pleased it's coming to fruition. You know, I still believe that advice is best, and I think technology really for us is about getting advisors to be more productive, to see more customers. It's absolutely not a replacement. It's creating the best possible version of themselves as an advisor that they can be, and making it a better user experience for customers. You know, we think about, you know, a mortgage broker in a traditional sense of sitting there with a paper fact find in someone's front room at 7 o'clock on a Wednesday evening. But, you know, customers want to interact in different ways. They want to engage initially on an app or through a website. You know, they want to do part of the fact find before the first meeting, and that's absolutely fine. We need to be able to provide solutions that fit that whole range of customers. And sort of when you're a network of our size, with the size and scale of businesses and the different models that we've got, you know, our biggest challenge, as I say, is trying to hone in on what's the best approach, really. But you know, I am fully supportive of technology, and I'm really excited about some of the conversation the lenders are having now. It feels like an exciting time, doesn't it, Steve? I mean, it feels like it's all coming together now, which is brilliant.
I'd echo that. I mean, I think it's hugely exciting. I think the market will, at that point I say about technology, will just continue to evolve, right? And the pace of it will only grow. So I think you turn the clock forward 5 years, I think almost the systems and the processes that we're all used to today will be unrecognisable in previous time. And actually, I think that for both the consumer and for the broker and the lender is a pretty exciting opportunity, actually. So yeah, I'd agree with that.
Robert, anything else to add on that, especially with regards to at the moment, you know, land registry still wants wet signatures and trying to get solved ID from one end to the other and so on. What's your views from Amy?
No, I think we're seeing some interesting developments around tech on ID and V. So there's a couple of big projects that we know are running, one by another trade body called TISA, another one that's a more private enterprise firm that links back into land registry. So there's promising stuff coming around all of that bit. But for me, this is all about, I think and Vicky's already touched on that. They have toolboxes, their CRM system that for me is the start point of everything. Making sure you've got a decent system that captures the consumer data is really, really important. And it's how you squirt that down all the various lines using APIs to get the right outcomes and allow the transparency for whoever needs to touch into that, whether it's the lender or the conveyancer or the surveyor or the customer themselves, to see how the journey is going. And you know, you've had care in the community with your technology systems in the family for a while, Dale. So we have this issue of how do we get all of this stuff connected. Some people will win massively out of this, some people who may lose massively out of this. We've got 3 main sourcing systems in our sector at the moment, and other people playing around the edges of this. I don't know who'll be the winner out of all of this. It will be people who tie this all together well commercially, with the right discussion and debate about how it hangs the whole interface together. Because ultimately, the thing that Vicky wants out of this is not just one that does the whole lender bit, but plugs the protection bit into it as well, and gives all of that end-to-end seamless process that allows the advisor to talk to the customer about the price of the package, that then squirts it all to the right places to get really, really quick decisioning, and then takes all of that into underwriting, whatever that underwriting looks like, out then into processing, whether that's the valuation or the conveyancer. All of that stuff coming together is going to be immensely complex. But as Steve said, we're seeing very, very rapid change on this. And people are investing huge amounts of money, and it's easy to invest a lot of money and not get very far in this industry, which is the other problem. But I think, and the interesting part for me will be Mortgage Brain decide to invest in a new chief exec who will come to this with a different view again. I think will radically shake things up again in the sector, which I think is all for the good, because what we want is people to compete very heavily in this, and we need to stop worrying about all the little, I'll call them the people who've solved individual little cells of a problem. That is not going to solve anything for anybody. We need how they bolt into the big holistic systems to get it right. And whether Vicky's system as a manifestation in Primis becomes the answer, or whether LNG's becomes the answer, or whether the existing sourcing system that actually managed to bolt things together to work well, it doesn't matter, but somebody will get this right and make it work effectively.
OMS. Anyway, just moving on to
good luck.
Final comments. Steve, what would you like to say to our audience? A couple of tips for the rest of the year.
Yeah, great plug there, Dale. I think I would say, so probably jumping back to the comment I made earlier, I think if we look at how the market is going to evolve over the next 12 months, I genuinely think there's going to be a super strong demand for customers who need the support of the specialist lending community. So if I could encourage advisors who are watching this today to take one message away, it would be to embrace that opportunity and work with specialist lenders like Bluestone to make sure that they are well placed, confident, and converse with the solutions that are available on the marketplace to support those customers. Significant opportunity, very complex. Those customers will be fragile and need that additional support that Vicky was talking through in terms of that advice and customer care package that she articulated earlier, and you can bring all of that together. I think that's a great opportunity to do some real good and support customers as they come out of what's been a trying time for all of us.
Absolutely. Robert, final comments?
I think I'd say is have a plan. Know exactly where your income's going to come from, know where your costs are going to go, and have a plan to make sure you and all the people you employ are busy. And think it through, as we've talked about already. Is it new acquisition? Is it the existing customers? Is it product transfers? Be really clear about setting targets about where you want to get to. So you don't have that clarity of thinking and a plan, you're not going to be able to measure how well you're doing this at any point in time. And I think the next 2 years, businesses that have clear plans and outlines of what it is they're trying to do and how they're going to deliver it will be the ones that will really do well.
Brilliant, thank you. And Vicky, over to you for the final words.
I think, you know, for advisors, for me, it's about keep up to date with your knowledge. Listen to what the lenders are telling you, keep up to date on criteria, know what you've got available, listen to your network, take guidance from your network, do the events, do all your CPD, do that, because knowledge is power. No matter what happens in the market, these customers coming in and out, whatever they may look like, you need to understand your proposition, because that will give you the edge, the competitive advantage over direct lenders and over other advisors that are sitting down the high street.
Brilliant. I could talk to you all day. Thank you very much. All three of you, very much appreciated. And thank you for watching. Look out for some more of these. We'll be doing some soon, but in the meantime, keep well and stay safe.